Morning, Steve Free in Chicago with the morning grain comments. Yesterday we had a pretty good sell-off on the forecasts of some rains moving into the Midwest over the next, let's say, 7 days. Overnight prices a little bit better. Beans up 3 cents, corn up 3, wheat up a nickel, and Minneapolis wheat up 15 cents. I think that's a reaction to the crop ratings in which the USDA dropped the corn ratings 1%. They estimated the bean ratings right now at 66% good to excellent, which is below average. And they dropped the hard red spring ratings 10% to 44% good to excellent. It's interesting that some comments that are being made right now, for instance, is that the U.S. Estimate of soil moisture index is the lowest level since 2012. They estimate that 52 million acres of corn and beans in the Midwest needs rain, which is about 30% of the total. As far as weather is concerned, northern plains, which need a rain, some think they're going to get 50% coverage of 0.2 to an inch, and that may not be enough. They also think that maybe Midwest will see 60% coverage over the next 5 days of 0.4 to 1 3/4 of an inch, locally or heavier. And again, that's good for those who get it, but more will need more rain for those that don't. We also saw one crop scout come out with a corn yield of 167 on 89.2 million planted acres. That's a 1675 carryout, and I think that where corn prices are, we're probably not trading that low of a yield yet. They came out with a 48 bean yield, and that would be a sufficient yield and carryout. But one of the unknowns is what is going to be our final bean export number. We have some people think that July and August we're going to pick up the pace and that we actually might ship 100 million bushels of beans more than what the USDA is saying. Now, a 350 carryout is still negative, but I don't think we're trading yet that increase in demand. And for spring wheat, some people think that if we don't get more rain than what is forecasted, we might add some more price to the spring wheat prices. The other thing that was noted yesterday is that the winter wheat harvest is about 17% done, and that average is 15, but the yields in the southern plains for Kansas is coming in about as expected, but nowhere near as good as last year, but the protein level is quite a bit lower than what people thought. So does that mean anything for deliveries? And does that mean anything for maybe a two-tiered basis between higher basis for higher protein and lower basis for lower protein? And as far as the weather is concerned, yesterday on the 15-day panel there was a ridge across the Midwest. It's still there. And so now we've got 2 days of confidence that there'll be some ridging across the Midwest. Today it kind of shows more in the southern plains up into the Ohio River Valley, but one model is kind of moving it a little bit further west. So we'll see if that confirms again tomorrow. So that would basically be around June 25 through June 27 that would see some ridging across the Midwest. It's interesting that one market reporter last night said the call of the day is don't sell breaks and don't sell rallies, which is a little bit of interesting right now because everybody wants to trade, everybody wants to figure out what's going to happen, and right now it feels like we're not quite trading enough bullish news, and yesterday's sell-off might have been a little bit overdone. So stay tuned on the weather, and we'll try to keep you updated on the crop growing conditions over the next 2 weeks, which I think is critical to price. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.